Right guys, welcome back. So today I'm going to show you 4 things that will exponentially help your trading. So carry on watching, I'll see you after the intro. Right guys, welcome back. So like I said, I'm going to show you 4 things that will exponentially help your trading. So if you're stuck in a bit of a rut, you might already be doing some of these, but if you try and do all 4 of them at the same time, then I'm pretty sure that will help your trading. So let's jump into it. Right, number 1 is obviously you can see my screen. So number 1 is basically one pair mixed with one strategy. So over here we've got 4 different pairs. Yeah, it doesn't matter what pairs they are, but there's so much going on, you can't focus on one. Yes, you might not have them all on one screen or over 4 different screens, but there's too much. You've got buys over there, then you've got sells here, you've got sells down there, you've got buys there. It's overly confusing and it all muddles up. Stick to one pair. So I personally stick to Euro USD. Soon as I started sticking to one pair, I'm not joking you, it helped a lot. I still needed to add these other things in, but it did help me a lot because I was mixing biases with other pairs and I was getting confused. And then when you're doing your lot size mixed with different pairs, and yeah, it can be confusing. So that's number 1, straight out the gate, whatever, if that's a phrase. But yeah, one pair, one strategy. The one strategy is basically just don't confuse yourself. Keep your strategy simple. Like I've got mine. I won't show you because obviously there might be a course at some point, so I need to kind of implement that in that. But either way, my strategy is the wallpaper of my screen, and I've got a little snippet of writing with a little picture of what it looks like next to it, and I've got 8 little boxes with writing in and little pictures next to it, and all I've got to do is follow that strategy. And it's the same pro trend and counter trend. The start is slightly different what I'm looking for, but it's the same strategy internally. So that's number 1. So now I've said one pair, let's just keep to one pair. So let's get Euro USD, well this is GEU, let's get EU because that's the one that I trade. So Euro USD, one pair. So number 2, so let's jot this down actually so you don't forget, or so I don't forget as well. Right, number 1 is one pair with one strategy. Right, number 2 is we don't want indicators. If you've got indicators on your chart, then slap yourself and get rid of them. They are terrible. Most indicators lag, so they show you after prices happened, which you've probably found this out yourself. But get rid of the indicators and just focus purely on market structure. So we want to do market structure, and we want to see where the order flow realignment is. So order flow realignment is actually my number 3, but we'll get into this in a second. So no indicators, market structure. When I say market structure, I mean, is it bullish, is it bearish? You know, we don't need to have an indicator to show us that. It's pretty simple here that we've got low, high, well, if it wants to click on it. No, it doesn't want to click on it, I'll do it there. Lower low, high, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and all the way down here, lower low. Right, there's market structure. Now, that is so much better than indicators. If you learn market structure, then that alone, that on its own will help your trading massively. But tip number 3 is look for order flow. I don't know why we've got a box around this. Let's get rid of the border. We don't need a box. So number 3, guys, is order flow realignment. So when I say order flow realignment, if I can get it. Yeah, order flow realignment. Oh, hang on a sec. We've got the word text for some reason. Right, don't forget guys to like and subscribe because there'll be plenty more useful information for you guys to help your trading. So order flow realignment number 3. In fact, I'm because I'm a bit OCD, I'm going to get rid of that box. Right, number 3, when I say this is, I mean, look over price and look where it kind of, it literally realigns. And when I say realigns, in fact we can do it here, I'll, let me drop down. So we're on the daily at the minute. If we drop down to the hourly, let's move that over there. Right, big screen again, guys. We've got the writing out of the way. So order flow realignment is pretty much where liquidity has been took. So if there's a high that's been took and it's basically wicked it, and then it's carried on going in the same direction. So in this case, it's bearish. So you've got to find out, you've got to look. It's pretty simple, to be fair, especially when you get to know it, you can clock it straight away. But when I say this, guys, straight away we've got, right, we've got a high here. We've got a lower high, a lower, lower low, lower high, and then we've got a lower low, lower high, lower low, and then a higher high. So this higher high here, if we get rid of that, that is the order flow realignment. And you can tell that because when we zoom in, we have actually took the money from that, we have liquidated that wick, and then we've carried on selling. So soon as this area goes past the low that made the order flow realignment, then we know that we are still bearish. Hence why as soon as that's there, you look for your order block, and straight away there was a bit of an order block there, which you might have just caught with that wick. In fact, funnily enough, there's another order flow realignment. They're everywhere, guys. So it's basically where the liquidity gets took, that is when you know the order flow is being realigned. So I won't go too much into it, but obviously straight off the bat you can see that it's here as well. You've got a high there, you've got a high there that gets realigned, and then we start selling again. So all throughout this is sells. Like obviously if you've been trading a while, you can do the buys up to the sells, but there's your sell areas, is when it needs to realign. That's your opportune moment to jump in the sell or the buy if it's for reversal, if it's the other way, sorry. So that's tip number 3. And number 3's disappeared. So number 4, guys, so I'll make this video as quick as I can, is only trade in the discount. Now, before we go on to the chart, I'll show you what I mean. So once you've marked your swing areas and you know where your order flow realignment is and your market structure is mapped out, then you can drop this path. This is the path tool, which is on the side of TradingView. Drop that path onto your chart, and then simple as. So right here, guys, oh, hang on 2 seconds. Where is it? Right. So we've broke this low, which means we're still technically bearish. So when we start taking the highs, we then know that we're coming to a reversal. So then what we can do, guys, is you can get the GAN box at the top of the swing, or obviously if you're bullish then the reverse. The GAN box shows you set it up for the 50% and only trade when you're in this 50%. Basically this is the discount. A lot of people say it's premium if you're selling and it's discount if you're buying, but that will confuse me. So I just always say the 50%, that basically the furthest 50% in that swing is the discount. So only trade in the discount, because I'll tell you why, guys. If you're trading, if you hit the swing bottom and you know that you've got the swing low and you start marking it up, you might be entering sells just there thinking it's going to do that, when really it's not. It's probably just mitigating taking some liquidity, tapping into an order block here and then going higher. You might even sell again here, but it doesn't. It's not tapped in to the best prices. Some trades only just tap the 50% then shoot down, but a lot of the time they take some liquidity again, and then they shoot up, they tag into an extreme order block or an area of imbalance, and then you can look at getting in for a strong sell or buy if it was the other way around. So that on the charts, I'll show you what that looks like on the charts. So like I say, we know that this, in fact I'll zoom in guys. So we know that this is the swing high, and we've not broken this structure yet. So we broke this high there with that. So we know that this is the swing low. So straight away, as soon as that's on the reversal, you can mark the swing high and you can mark the swing low. In fact, this is a perfect example. So a lot of you, myself included, might have gone in this. You might have sold in this, covering the highs and aiming for the lows. And obviously you'd have got pretty close, but you'd have ended up being took out, break even, or lost that trade. Obviously we have got lower time frame confirmations, which I won't say on this video. That could be for another video. But yeah, basically that's in the 50%. If you don't sell in that 50%, you've got less chance of having the trade that you want. Let's see if I can find a better example. In fact, is that one? Yeah, so there we've got another swing here guys. Here's the order flow realignment there, and then we start changing the swing there. So we've got the three red lines. If you don't know about the discount area, the top 50%, you might want to be selling it's in this imbalance, say. So obviously we've took this high now. We've took that high. So we know that we're coming up to the reverse, we're reversing in this little swing. But you might be wanting to sell in this imbalance zone, which is not necessarily bad, but because you're not further into the better prices, basically you've got liquidity all the way over here. You've got liquidity, so we need to take that little bit more out. Even though we didn't take a lot, we did tap into the 50%. So if you'd have put that on there, even if you'd have covered that high, you would have got took out relatively quick. But if you'd have waited to tap in to the 50%, then drop down to a lower time frame, say I look at the 15-minute or even the 1 minute, and then look for lower time confirmations that tell you that the trade is actually changing. But like I say, that's another video. So number 4 guys, just to recap, right, is, I'm sorry the video's gone on 12-13 minutes, but I'm trying to make it as clear as possible for you. So only trade discount. If you find yourself entering trades, you know that it's turned around, you know that the swing is over now and it starts to level itself out and it's biting its way back up, then drop the GAN box on and wait for the 50%. Some of them you might not even touch 50% and carry on going down, but it's no money lost. It's just a missed trade. It's not even a missed trade because it won't be in your plan. You've got better chance of getting profit from trades that are in the discount, in the 50% that's furthest away from the swing. Basically, the higher, obviously if it's bearish, the higher 50% is better, and if it's bullish, the lower 50% is better to trade from. So that being said, there's your 4 points. 4 points that will help you exponentially improve your trading. So just a quick recap: one pair with one strategy, so it doesn't overfill your brain with all these different biases on different pairs and different entries, say, with different strategies. Number 2 is focus on market structure. So actually zoom out, find where the swings are. You find where the swings are by marking the order flow realignment. So where it's took liquidity, then carried on with the trend. And then finally, guys, number 4 is only trade discount. If you find yourself buying or selling in the wrong 50%, then more than likely, I'd say probably 90% of the time, you're going to get liquidated and you will lose that trade, or it'll be break even, but it won't be a win. 90% of the time. So focus on the extreme 50% at least, and then look for your lower time confirmations, and yeah, you should be good to go. So thanks for watching, guys, and I will catch you on the next one.